traders, and welcome to Pepperstone's technical analysis wrap on Friday the 15th of May. So we've seen some pretty good moves in the last couple of days since the Wednesday night webinars. We can see that a couple of the key support and resistance zones have been tested and broken. So yeah, it's certainly some good scalping opportunities ahead of us, I think. So we'll jump straight into the charts and see if we can identify some of the next potential moves in the next few days. So we'll start here with the Aussie USD. You can see that it has certainly had a crack of getting past these moving averages. You can see that it tested the 20 and the 50 here. We've got definitely what is a hammer candle in that direction. Now a lot of people have been following this one up. It's been a pretty good trend line right through. So yeah, look, it's one of those ones where we can pop it to a line chart, and I think you can actually probably see the full extent of this move. We can see very clear highs and very clear higher lows all the way up. Okay, so we know that this one's been a pretty good trade, but it certainly showed some weakness. Okay, what we wanted to see in this area here was a new high to really consolidate that this trend is going along. It hasn't reached the area that we thought it was going to yet, so up here at around that sort of 67-cent mark is where we would probably expect this one to really get to. It hasn't done that, so what we're waiting for now is a breach of this zone here to confirm that it is going lower. It's certainly, the moving averages have certainly pulled it up, there's no question about that. A hammer candle is strong in that area, but that said, we did have the weakness here. There's MACD weakness, as you can see. I'll pop that there on the chart. So, okay, so we've got a bit of divergence there, at that sort of double top area. It's not convincing me either way. This is not one of those ones where I would be jumping in, feet first. I'd want to be wanting to see a new high. If we get a new break close high above this level here, I just don't think it's going to stop until it gets to the 200, or that's at the very least, and then onto our resistance level. But in another scenario, you can see it definitely closing down below this level here, which is around that sort of 63.80 area. A close below there would probably signal to me that this is going back to the lows, and we can probably start shorting it again down into the sort of the 60-cent zone. So it's in the middle of nowhere at this point. We can see the last three candles have been very, very wicky. So just one to watch. Probably scalping opportunities only on this one. Take short scalps. Don't try and pick a direction on where the long trend is going until we get a break of either of those zones. Very, very important on that one. All right, we'll move on to the US dollar CAD. This one's been pretty good now. It's starting to consolidate in this area. We can see here, this is on a daily chart. The 50 moving average has pulled it up. When the 20 fails you, the 50 is your next point of defense, and as you can see, it's done a pretty good job of rejecting that every single time it's come down. It's found pretty neutral ground here at that sort of 140 area. This is one of those ones where you probably don't really want to be preempting a big move up, but that said, it's getting a really, really good scalping zone in between the support and resistance. We can even, draw what is starting to appear to be a triangle now. Let me just get that up there. Let's have a look. Okay, so we can start to see what is effectively a triangle. So, and all that's telling us is that, price is starting to obviously consolidate and is starting to coil, all right? So that's a pretty, and that's pretty good movements, because you can see that the highs of the lows, are obviously getting higher, the highs are getting lower, it's coiling up, okay? So ideally, in a triangle situation, we want to see a break around this zone here, which is about 2/3 of the way through. Trying to pick which direction this is going to go in is anyone's guess. I've got absolutely no idea, and if anyone does, good on them, because I certainly don't. But yeah, like we always say, trade what we see, and what we're seeing at the moment is good consolidation in between these two barriers. Okay, so a break of either in either direction will be a good thing. In this scenario, though, obviously, if it breaks to the higher and we get a close, on a daily chart above this level here, that would be great. It would probably give us a pretty good signal that 144 to 145 area is the next stop. And of course, a break low exposes it all the way down to here. So, because it had a very, very big move up, it's got a bit of work to do on the way down. I mean, and this is what we always talk about as well. We want to take the path of least resistance. If it breaks up, okay, it's got the moving averages behind it, which means, of course, that the moving averages are there to help protect your stop loss. So the more things that you can put between your entry point and your stop loss, the better chance your trade's going to have of actually being successful. So that's really important to keep that in mind. So our preferable trade, not because we've got a bias, but our preferable trade would be to the upside, just simply because there is less traffic in front of it. there's a lot of blue sky to get to this level up here. But if it goes and breaks to the downside, it's obviously got to get through the moving averages first, and then the moving average is still tracking up. So it's got a lot of work to do to actually break down. The moving averages have got to turn around. They've got to start, tracking down. That is not happening at the moment. So the preferred move is up, but we will take either. We're not overly concerned which direction because we certainly haven't got a bias there. All right, we'll move on to the US dollar Swissy. I could nearly hit play on last week's video on this one. It has been doing the same thing for weeks now. But that said, we've had plenty of traders get plenty of pips out of this one. It's sticking within the range. It's playing the game. Trading and scalping doesn't get easier than it does on the Swissy at the moment. So hopefully everybody's heeding that advice and taking advantage of this, because it's been a really, really good period. That doesn't look like it's changing anytime soon. The moving averages are still literally running parallel and horizontal. They might as well be a horizontal a line, really. That's all they are. They're proving support at the moment. It's sitting right in the middle. I mean, if I measured that, it would be right in the middle of the channel. The upside obviously has got 200 in front of it, but there's still plenty of room to move there for scalping opportunities. And the downside, like I've mentioned, it's got the moving averages in front of it. So a break below those moving averages would expose it to these lows here at around that 96. They're not big moves, we know this, but you got to trade it for what it is. Don't pick a direction, just scalp it until we get more evidence to the contrary that it's actually going to start moving. But scalp is heaven. Just continue with the scalping up and down in between those zones on that one. All right, we'll move on to the US dollar yen. Okay, this one is an interesting one now. It's been, it's had a real crack at breaking up above the moving averages on the daily now. It's been coming down, making lower highs and lower lows for, the best part of a month and a half. But, it showed some signs of strength over the last, week, really. It looks like this week's been a pretty strong move for it. It's come back down. It's found support again here on the 50. I'll blow that up so we can see it a little bit better. So you can see there, it's broken up above. We can put a line here to just demonstrate the power of that there. Okay, so we can see there it's broken up through there. It's come back and tested these moving averages now. Both of them have been rejected. The last 2 days you can see have rejected back up to the 20, and the moving averages are starting to turn. So this could be the catalyst to make this one start to move. We can see, it's obvious, very, very clear resistance is going to be at the 108.50. So there's no question about that. You can see here how strong it's been for a long, long time. The 107 is a very, very strong level for it. So if it remains between the 107 and the 108.50, there's 150 pips range there that we can certainly scalp. Not keen on picking a direction on this one in the interim. I'm just wanting to scalp this one as well. You can see that it's in a pretty reasonable range and it's right in the middle of it. So plenty of room to the upside for scalping and still plenty of room for the downside as well. But ideally what we want to see is price get above these moving averages and stay there and start to target opportunities to get to the 108.50. What we want to see now is obviously we've got our low, we've got our high. We've got a higher low. If price gets up and makes a new high above that sort of 107.80 to 107.90 and closes up there on a daily, that really exposes the upside for 100 pips, or not so much 100, probably about 70 or 80 there, to get to the 108.50 at the first point of call. So 70 pips is still a pretty good scalp, but you'd want to be very careful at that point there because it's got a brick wall in front of it to get past that 108.50. That's not going to be an easy task unless we get a news announcement that is going to really help it. Okay, the S&P 500, the S&P 500. This is the one that we keep talking about. It's showing weakness, not doing anything. Very, very exciting. You can see again overnight, it's basically, it tried to go down. It definitely did. It went down to the 27.61, failing to hold those lows. Not one that I'm really keen on. Very good for scalping. Terrible to pick the direction. The obvious direction is, a good long or a good short on this if it breaks key zones, but it doesn't look like it wants to do that anytime soon. Not sure what the catalyst is going to be for that. Not even going to try and preempt it. So again, we trade what we see. It's tested this level a few times, so if it gets down there, unless we get a close below at least the 27.50, I'm not interested in shorting this, and it has to close above that sort of 29.70 area to even consider taking it long. For a longer period of time, that is. Scalping, on the other hand, there's obviously that range is starting to help us out now. We can see that yeah, there's plenty of room to go up to the, sort of that 29 resistance, 29.50 resistance. And they've got a little bit of shorting opportunities. They're sitting at 28.50, basically in the middle of the zone. So there's 50 or 60 easy points down, and the same on the way up as well. So if you can find scalping opportunities on the smaller time frames on this one, you can certainly take those and basically aim for those levels of resistance and support and play that game until we eventually get the break. It will break eventually. This is not the end of the world for it. It's not staying here. But yeah, we just have to wait for that. We have to wait for price action to determine where we're going with this one. So just keep an eye on it and yeah, basically scalp in between those zones. All right, we will move on to gold. Gold, the trade has finally broken this triangle. We can see that it's been basically in this zone for quite some time. We had a really, really good break of it over the last couple of days. It's broken to the upside of the triangle. A question that I get asked a lot is, you know, do you go to lows or do you go to highs or wicks when you're drawing up the triangles? My advice on that one is always, if it's very clear cut with bodies that are closing nicely, you can just stick with the candle action. But if it's a little bit confusing and wicky, like you can see this one is, the best way is always to go to a line chart. You draw a line chart with it and you can see that smooths out price. It gets rid of a lot of the noise, and you can see that triangle is very clear now. The bottoms are very, very easily touched. You've got three very, very clear touches. Same deal on the way down. So then you can see the triangle, then you can take it to the candles and you can work on that. But at least you know that although it looks a little bit messy, it's still being contained, and the line chart is dictating that the smoothed price is definitely within that bound. And it's broken at a pretty good time, about 2/3 of the way through. So it has broken at a really, really good time. That candle there was your break. I know a lot of people caught that sort of, it's been about $30. You know, a lot of people traded this when it was at 1700. It's sort of that or just above 1700. The 17 sort of 15 to 1735 area was a very, very good trade. That break was very clear. You know, a good trade if you got it. But that triangle has been setting up for a while, so hopefully a lot of people did get involved in that because we've been talking about it for a little while. All right, the last one we will look at today is the pound odd. I've had a lot of requests for the pound odd because people have been trading this one on the way down. It's been pretty good. It's been behaving itself on a technical standpoint. You can see here that it's making lower highs and lower lows. Had a little bit of trouble getting through the 200. Very, very wicky, as you can see there. But it's done it. Yeah, it's done the job now. It's come back down. It's tested the 200 and sold off it a little bit. You can see the very clear targets. We shorted it from up here down to this first support zone. The second support zone is around that sort of 186.30 area. Yeah, it was important that it broke through that support there and broke the 200 before we started looking to the greater short. It wouldn't surprise me to see it come up and retest this level again. But all that's probably going to provide is another shorting opportunity unless price really breaks through and closes above this level. That'll give the 20 a chance to catch up and probably move down towards it. In an ideal situation, the 20 will get down and provide extra resistance at around this level. We're going to change of trend on a smaller time frame and then try to short it down to the 186 or the mid 186s. So really good trade. Yeah, just keep an eye on this one. Sort of scalp it probably on the smaller time frames in between these zones. If it keeps selling off, we'll just keep selling off the 20s on the smaller time frames. But if it does indeed turn around and retest this level, look for the bigger time frame resistance to short it again and keep in that direction until it tells us otherwise. Alright, so I hope everybody has had an awesome week's trading. We've had some really good opportunities. Hopefully everybody's been able to catch them, and we look forward to some really good trading next week. I think we've got some really good setups that the market can play the game with. Have a great weekend, everyone, and I look forward to seeing you all next week.